Hi guys, welcome to our liquidity video. Today it's gonna be a lot of theory, mostly theory, but it's very important. So guys, just stick with me. Some really important stuff. We're gonna talk about equal highs, equal lows, what market maker is, what they do in the market, stuff like that. And before we begin, I just wanted to mention that I have my Telegram channel where I post my trades, my market thoughts, and also the detailed PDFs where you can find all the information regarding any lecture of this course. So first link in the description, and let's get straight into it. Okay, so before we talk about liquidity, we need to understand who actually moves the market. And we have market makers and retail traders, and retail traders is us. So market maker, it's usually exchange, a large fund, or maybe individual trader who is operating with like significant capital. Obviously, I don't have it, and I don't think that many single traders have the capital to actually move the market. So their scale gives them an ability to move the market intentionally or not, and in some cases shape kind of the price of an asset through their activity. So we need to understand that limit orders, they don't move the market. Only market orders do. So the ones that are filled. And a lot of traders think price moves because of people panic, get greedy, or maybe they act irrationally. That's a convenient story, but it's not what actually drives the market. Price moves because of liquidity is needed. Market makers aren't looking like at RSI, chart patterns, or maybe some market sentiments. Their job is rather straightforward, is to execute large positions without blowing up the price in the process. For that, they need counterparties. They need the orders to trade against. So if they want to buy, they need sell orders, and vice versa. And liquidity is simply a cluster of orders sitting at the same level, and traders tend to place orders in very similar obvious locations. So stops go below lows and above highs, breakout buys stack above resistance, limits collect around support and resistance, and over time the behaviors from clear liquidity zones. And this leads to a simple but critical idea. Price moves towards liquidity. And that's one of the most general rules in trading, that price hunts liquidity. Imagine large players want to sell heavily, and in order to do that, they need buyers. Those buyers are already there, and they're waiting above recent highs. They're waiting for their orders to be filled or maybe stopped. So the prices push higher. Traders see strengths, confidence builds, and more loans enter. Liquidity keeps growing above the highs, and once price breaks the level, all those orders fire at once. And to most traders, it would look like a bullish breakout. But at the exact moment, the buying pressure provides a perfect environment for large sellers, for market makers. They sell into the demand, and they don't rush in early. They wait for price to reach the liquidity. And once that pull is absorbed, there is no fuel left to keep pushing higher, price stalls, and then it turns. And people call this manipulation or stop hunting, but there is actually nothing personal about it. Market makers aren't chasing your stop. They don't know who you are. Your order just happens to sit in the same obvious place as thousands of orders. And this is also why a break of structure often comes after liquidity is taken. Because the first move clears the board and the next shows the real direction. And if you keep one mental image in mind, let it be so. Price acts like a vacuum cleaner. It moves to the kind of biggest pile of orders, absorbs them, and then moves on. Most of the time to another pile of orders on the other side. And once you start thinking actually in terms of liquidity, price action stops feeling as chaotic as it was before. It becomes more procedural. And that's when market starts to actually kind of make sense. And in order to begin with, let's talk about equal highs and equal lows. Equal highs and equal lows. Equal lows, they mark spots on the chart where the price hits roughly the same low multiple times over a period. So here we can see this, that these zones they kind of sit over the same line. My actual initial idea was to make it all, let me just quickly do like this. My initial idea was to make it all nicely in line, but yeah, just, and that would be equal low, because roughly the same low over some certain period of time. And these points hit often at the support level because the market kind of keeps defending that price. Because you see, we go here, we touch the zone, we go up. We touch the zone, we go up. Touch the zone, we go up. Once we broke it down, market maker was able to fill his position and boom. Very quick move to the upside. And equal highs, basically the same exact scene, but to the reversal. Actually, yeah, that's convenient. Same guys, equal high. Let me just write it. EQH. And that would be EQL, equal low. Yeah, so it's a flip side. It's where price repeatedly touches a similar high, indicating the resistance, where sellers keep stepping in, they bring the price down, and once we broke, market maker fills position, boom, we go down. And you might ask, why is this important? And that's because traders tend to set stops just beyond higher lows. It's a standard risk management price. So if, for instance, you are entering somewhere here, you would put your stop somewhere here or somewhere here. So then someone entered here, someone entered here, someone entered here, someone entered here. And you need to understand that more equal highs we hit, more orders we have on top, which is really, really crucial. That's why on a higher time frame, if we see equal highs, it's way more efficient than equal highs on a lower time frame or equal lows. That doesn't matter. So the more, yeah, as I said, the more time price hits the same level, the more liquidity accumulates there. And large players, actually like anybody else, they notice the zones because all those clustered orders make it easier to enter or exit positions without the moving market too much. And that's exactly the reason these areas are kind of targeted in trading. Okay. And maybe we could jump on the chart, and actually I have a pretty nice... Oh, another thing, guys, I wanted to talk about is a build-up liquidity. That's, I have actually a great... That's also a multiple order sitting at the same zone, and something I wanted to talk about, and actually want to show it on the currently Bitcoin level. Especially it's very, very strong on higher time frames. And we can see that we have this build-up liquidity, and more it occurs, stronger it is. So also higher time frame, stronger it is. And when the price reaches this level, you can expect a very big movement because there are a lot of orders lying here. So here you can see we didn't let it break through. Here we did break through, but we closed on top. And I'm really curious because price is actually approaching this area here. What will happen? But here we have some other liquidity levels we need to bypass first before we're coming to this big build-up liquidity. And here actually on my example, I was shown, I just looked at the chart and I saw that it might be, oh fuck, I forgot already. Yeah, actually, something like that is also pretty interesting because we can see that orders are building up here. So then when people make these lines, they might actually mean something. Next, what people don't really talk about is inside and outside liquidity, and I wish it would actually be brought up more. I've watched many courses and I think it's pretty important stuff. So we have, you can say, outside liquidity and inside liquidity. And it can be, as you might also hear, SSL, sell side liquidity, and BSL, buy side liquidity. SSL would be on the bottom. So this we can, like, I don't know, make orange and say SSL. BSL. So that's external liquidity. What would be internal liquidity is all that. All these moves. That's the liquidity. As well as these levels. And you need to understand that level of external liquidity can signal where price might reverse or continue. So SSL, BSL. Big players often use these zones to manipulate liquidity and build their positions. And internal liquidity, it helps push price towards these external targets. And if you understand this relationship, you can better anticipate not just where price is going, but also how strong the move might be. And let's get rid of this trade. Here you can also, guys, see that here we have lots of liquidity. We take all this liquidity with this move. We tap. That's actually also a great showcase of equal high, because as BSL it also kind of equals to equal highs. You can see this level, this level, this level, this level. Is it going? Okay, and here we actually broke it down. So also was a pretty strong resistance. So here, guys, you can see we grabbed liquidity. First, we actually broke the SSL. We even had some closures in there. After that, we grabbed these levels. We tapped into our BSL. And guys, it could be as simple as this. What you can always do is just actually do stuff like this with a super minimal stop. You can put your, as that's not a financial advice, obviously, and that's a very simple strategy. I don't recommend trading just based off that. But in case you don't like what I'm teaching, you can just do basics. And that's the basics. Do that if you want. And you see, with such a small stops here, 29 risk reward. Here it didn't actually tap. Here you could have entered as well. Here, yeah, also not quite that. But that's just for an example, guys. I do not recommend to do all of this and trade like that. So traders who actually keep track of this internal and external liquidity, it allows them for kind of smarter strategy decisions. And it helps to avoid getting trapped. And yeah, most of the times once we hit SSL, we move to BSL and vice versa. So guys, next what I want to talk about is support and resistance levels. But it's already late for me and I will make a second video about this in addition to this one. So we'll have like 2 videos regarding liquidity. I don't think it would take much time. I would say around maybe 8 to 10 minutes. We're talking about support and resistance levels, zones. So guys, thanks for watching. Don't forget to join Telegram. Detailed PDFs will be in the group. Homework might also be in the group. My trades and actually just communicating with me is all via Telegram. Have a nice day, guys. Merry Christmas to everybody who celebrates. I'm not sure when this video will go public. And have a good day.